Hey guys, welcome back. Hope you had a great weekend. I just got back to Texas. You guys know over the weekend, my wife and I were traveling to Boston, Newport, Rhode Island, visiting some friends. We had an amazing time. It is a beautiful part of the country. It was a little rainy over the weekend, but it was beautiful nonetheless. I highly recommend you visiting that part of the Northeast if you haven't. But I am happy to be back in Texas. It's a bit hot though. For you Texans on the line, you know what I mean. It's 106 degrees when I landed in Dallas this afternoon, but it is awesome to be back. Tonight's video, I want to focus on a couple things. One, I want to talk about the signal right now that we're seeing with Nvidia. Not their earnings, we'll go to some of that, but what they told some of their biggest customers. Because we know for years that Wall Street has treated the memory vendors like they're just a cyclical commodity vendor, a provider to the street. And they've given the GPU players all the respect. Well, right now, we are clearly seeing a shift in that balance of power right now. And NVIDIA demonstrated that because they had to tell their biggest customers that basically they cannot absorb the cost anymore. And there will be up to a 15% increase in their architectures beginning in early 2027. These are the architectures around Grace Blackwell and Vera Rubin. It's all because of rising memory costs. And the second thing we're seeing right now is a potential shift in the memory oligopoly. So when we take a look at the packaging exports that are coming out of Korea, Samsung is making massive moves. We're seeing SK Hynix actually take a step back with some of the delays related to Vera Rubin, and Samsung is taking advantage of that delay on their side. They are picking up market share right now in the HBM4 space. What does it mean? Will we have a shift? Will SK Hynix be dethroned as the market leader within the HBM marketplace? And what does it mean for Micron? And then finally, I want to talk about what we're seeing in the Cosby right now. What we're seeing with SK Hynix and Samsung, because they are being penalized for an unbelievable reason. I want to walk through that with you because I think, honestly, it is ridiculous. The expectations have just gotten too lofty, too unbelievably high for these companies. I'm going to tell you why Samsung is being penalized, and I think you will agree with me after I go through that story that it is just outrageous. And this is going to spill over into our market at the opening bell. We're going to see our memory providers gap down tomorrow morning. No question about it. And there isn't a good reason for it. And that's frustrating to me, probably frustrating to you as well. And then finally, let's talk a little bit about the Nvidia earnings that we'll see on Wednesday and what we as memory investors should be looking for and listening for when Jensen drops those earnings onto the street Wednesday afternoon. So let's get into it. But if you haven't done it already, make sure you hit like, make sure you subscribe to the channel. Guys, it is my 52nd birthday tomorrow. So do me a favor. If you're watching this video and haven't subscribed yet, subscribe now. Or tell a friend and have them subscribe. Let's continue to grow market signal. Let's get to 50,000 subscribers and beyond. All right, let's get started. Let's talk about the first story, which is clearly Nvidia's story. Probably one of the biggest signals that we saw over the weekend. This dropped on Saturday, as you can see, and it says Nvidia customers face over 15% server price hikes as memory costs soar. We go through some of the details. You see rising memory chip costs are pushing up the price of servers that use Nvidia's artificial intelligence chips. And some of the biggest chip makers right now are facing increases of more than 15%. So those are clearly Google, Microsoft, Oracle, and others that'll have to face this increase. And the memory chip makers of Samsung, SK Hynix, and Micron, we all know they have gained unprecedented leverage in the market right now based on the demand for their products, based on how demand is just outstripping the supply this year and into 2027. It's going to be worse. But NVIDIA needs these chips because the effectiveness of their AI accelerators depends on how much DRAM those accelerators are paired with. So it is a price that they just cannot sidestep, and they can't absorb it anymore. They actually have to push the price down, the cost down to their customers. We see this on the consumer side already. We are seeing, whether it's original equipment makers like Dell, HP, we see Apple, they're rising the price of their goods because of the cost of memory. They're pushing those costs onto the consumers. And now we're seeing NVIDIA do the same exact thing with the hyperscalers, with their big customers that are buying their products. They can no longer absorb the rising cost of memory. And if we scroll down below, there's another piece in here that was interesting. It calls out, it talks about major customers like Amazon, Microsoft, Google, and Meta that are all trying to develop their own in-house chip program, but they remain dependent on purchases from Nvidia for their data center buildouts. And they also remain dependent on their relationship or their ability to get supply from the big three, from Samsung, from SK Hynix, and from Micron overall. But this is a clear sign that the pricing power and the leverage and the importance that the memory providers have right now in the market is just astronomical. We're seeing companies like Nvidia, they just can't absorb it anymore. This is a company with a 75% gross margin that just can't absorb it anymore. They have to pass the cost down to their big customers overall. And for long-term investors like myself, there is a key tension, like I mentioned, to track here, because this 15% multi-million-dollar server rack and this push down these costs, it arrives at the same exact time that we're seeing all of this political opposition that hit the Wall Street Journal yesterday. We're seeing it on both sides of the party. It is becoming a hornet's nest, if we're quite honest. With the midterms coming up, this is a key focal point for the midterms. It will be a discussion point in all of the elections coming up. So it is massive scrutiny right now we're seeing in the marketplace, and this price increase could complicate it all. It could add another layer of complexity and complication to the build out. If memory costs force total cluster budgets, if they force them up by hundreds of millions of dollars, memory pricing itself could become one of the mechanisms that temper the pace of the data center deployment. So just think about that. Out of everything else that we've talked about, it very well could be the memory products that slow down the pace of the data center build out because of the cost of memory overall. And lastly, just as the article called out, as an investor, you might think that the cloud providers can develop their own in-house chips, whether that's Google, Amazon, or Meta. But here's the reality. They may be able to bypass NVIDIA's GPUs, but they rely on the exact same HBM supply from Micron, SK Hynix, and Samsung. So you can swap the processor, but you cannot escape the memory bottleneck in today's market. And that brings me to the second major point that I want to talk about tonight, which is this shifting in power, potential shifting, this shift in power that we could see. And you can see in the article that Samsung leads the HBM4 shipments as Korea export data shows strength. If we go through this quick article, it says the Korean July semiconductor export data shows strong overall performance for Samsung, while SK Hynix posted weaker than expected results, according to Bernstein. Overall, the HBM export from Korea rose by 13% quarter over quarter versus April. And though it declined month over month by 32% due to seasonality, the year over year growth was up 64%. Now, here's the key piece within the report, which is an interesting factor for us to consider. We see that Samsung's HBM, their exports jumped by 122% quarter over quarter, and Bernstein projects that Samsung's third quarter HBM revenue could rise 80% quarter over quarter, 30% ahead of the firm's forecast. SK Hynix, on the other hand, fell approximately 27%, both month over month and quarter over quarter. And Bernstein's regression analysis predicts that SK Hynix's second quarter HBM revenue could decline by 20% quarter over quarter, significantly below estimates. The firm attributes this weakness to delayed HBM4 shipments for Rubin. So we know that for the last couple of years that SK Hynix has dominated the HBM cycle. They dominated the HBM3 cycle. But Bernstein's latest analysis, what I just walked through there, the export data from South Korea shows that SK Hynix regional HBM exports, was dropped by 27% quarter over quarter. And that's due to the delayed HBM4 shipments for NVIDIA's Rubin architecture. Samsung capitalized on that opening with its primary HBM packaging jumping 22% in the third quarter, and their revenue tracks 80% higher. Now, guys, keep in mind, these are regional export proxies. They're not audited company HBM shipment data. So I wouldn't use this to declare that Samsung is the new HBM king. But I would absolutely use it as evidence that Samsung's HBM4 ramp is accelerating faster than many investors expect. So where does Micron fit into this long-term competitive landscape? That may be a question you're asking yourself after I just went through the Samsung and SK Hynix data. And in my opinion, Micron is in a position of strength, and that is not just speculation. This week, right now, actually, we're seeing a key conference in Stanford called Hot Chips, where all of the chief architects for Micron, SK Hynix, and Samsung, and many of the other companies are there presenting on their technology and their roadmaps and their products. And we're hearing the same thing from all of the memory companies. They're talking about how scaling memory bandwidth is physically harder in the marketplace right now than scaling GPU compute. And Micron is showcasing their products. They showcased their 12 high HBM4 stacks and talked about and just showed how it's delivering over 2.8 terabytes per second of bandwidth per stack with 11 gigabits per second pin speeds. It's outperforming standard JEDEC specifications to keep pace with AI compute demands. And just remember that Micron isn't merely sampling HBM4. Its 36 gigabyte 12 high product entered high volume production in the first quarter of this year. And that product is specifically designed for Vera Rubin. And meanwhile, their higher capacity 48 gigabyte 16 high HBM4 is already sampling to customers. They are shooting to roughly secure, many are mentioning they have already secured 20% of Nvidia's initial HBM4 allocation. So Micron, as I mentioned earlier, is in a position of strength overall in the marketplace as well. But I want to jump to the two last pieces, which is what is happening right now with the Korean players. So here's Micron, as I mentioned, in the after hours, we're down by about $28, right about $9.39 right now. All the other players are down, but take a look at what we're seeing in the Kospi. We're seeing Samsung down by 9%. SK Hynix down by almost 2.5%. And what is the reason these are being driven down right now? The main reason, and I've seen this in many different reports, as you can clearly see on the screen, that Samsung shares are sliding as record shareholder returns disappoint. So the company's returning $80 billion to the shareholders, and analysts feel this is disappointing. They should have returned more. If we go through the data, you see that shares of Samsung are down. It fell 8% in early trade on Monday after the company's record $79 billion shareholder return plan disappointed investors who had expected a larger share of Samsung's AI-fueled cash windfalls and greater clarity on share buybacks. If you remember, there's two different phases. They were doing cash dividends, and then they were going to do buybacks in later part of the year overall. And remember, this is 5 times the prior record for the company, which was in 2020. And analysts said that the projected returns were smaller than they had anticipated and that they expected more details on the buyback plans. So this kind of, I'll be honest with you, this frustrates me a bit because you see a company that is returning $80 billion to their shareholders, and they're being penalized for that because they're not delivering more. SK Hynix delivered $29 billion, and they're canceling their shares, and that was rewarded. And we're seeing Samsung right now return $80 billion, and the company is being penalized overall. I just think it is unbelievably high expectations for these companies right now that they face in the marketplace. I think this will be another bump in the road, another just hurdle for the sector to overcome, for nothing that's based on fundamentals, everything that's based on lofty expectations. And as I said in the beginning, just a bit of ridiculousness that you've returned $80 billion to shareholders and it's not enough. The analysts don't think that's a big enough number, so the stock is being penalized. But I would expect to see a gap down for Micron, for SanDisk, Western Digital, and Seagate tomorrow morning. If I look down at them, you can see kind of where they're trading today. Let me just jump back to where we were. You can see Micron is down by $27. If I scroll down just a bit further, I'm sorry, guys. You see Western Digital's down by about 2%, $9. We see SanDisk is down by 3.5%, and we're seeing Seagate also down by about 2%, all being driven by what's happening right now in the Korean market, in the Kospi, what's happening with those lofty expectations. But that sets us up for what the big catalyst we will have this week, on Wednesday of this week, with Nvidia's earnings. And just give me a second for that to load. I wanted to show you just what we expect. If you can see, here's what they're expected to deliver. So expected to deliver $92 billion in the quarter and an earnings per share of just over $2, $2.07 for the company. I think they will beat both of these numbers. I think they will have a beat and raise, quite frankly, but will it be high enough? Are the expectations still so high for Nvidia that no matter how good their earnings are, it just doesn't move the stock? I hope that's not the case, because I think we will see it move the stock, and I think we will see it positively move the memory sector. But what should we be listening for in Nvidia's earnings? There's 4 things that I'm listening for overall. Is number 1, are the Rubin deployments still on schedule? 2, based on the prices that we just heard going up, are customers accepting higher system prices without reducing orders? That's a key piece we need to listen for from Jensen. Does Nvidia mention memory availability as a constraint for their architecture, a constraint for their performance moving forward? And finally, are higher memory costs affecting system economics or gross margin expectations? Because I think if we see, let me pull this back. I think if we see and hear from Nvidia that they tell us that Rubin demand remains intact despite the 15% higher system prices, that may be one of the strongest confirmations that we have yet that the memory suppliers still have room to push price. But if we hear from Nvidia, if they start talking about customer digestion, configuration changes, or deployment delays because of total system costs, that would be the first evidence that memory pricing power is beginning to start to impact demand in the marketplace. So that's what I'm going to be looking and listening for on Nvidia's earnings on Wednesday. But we clearly had some strong signals from Nvidia with the pricing, and we're also seeing strong packaging exports from Korea, just showing us that the demand for HBM is still strong, and Samsung had an outstanding quarter overall. But guys, let me know what your thoughts are. Let me know what you're thinking right now with the Asian providers, that performance that we're seeing with Samsung and SK Hynix in the Kospi. What do you think it'll do in our markets tomorrow? I think we are going to have a gap down, but unfortunately, it is always just based on some ridiculous story. The fact that Samsung gives $80 billion back and it's not enough. But let me know your thoughts. Let me know what you're thinking about the sector overall, and I hope you have a great